And welcome back. Before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. Construction companies are currently preparing for bids for the Abu Dhabi 7 billion dirham metro and light rail scheme as the Department of Transport moves forward with the tendering process this week. According to reports, bidders are to submit statements of intent to the government on Wednesday, followed by pre-qualification documents in August. The list of pre-qualified contractors will then be drawn up by the Department of Transport by October, and the first contracts are likely to be tendered by the end of next March. A number of global companies have shown an interest, including German company Siemens, US-based Bechtel, and South Korean contractor Samsung Engineering. The multi-billion dirham project will be one of the largest construction enterprises in the Emirate. And the Department of Transport expects the first parts of the network to be up and running by 2016-2017. Most of the metro system is expected to be underground, with the first phase covering 18 kilometres between Zayed Sports City on the south of Abu Dhabi Island and the MENA port to the north. Trains on this section will stop at 17 stations on the line. The two light railway systems above ground will see a 15-kilometre blue line from Marina Mall to Reem Island, while a 13-kilometre green line will run from the central bus station to Saadiyat Island. DR Development has opened a new branch in Business Bay that was inaugurated today by Saeed Al-Khatami, the CEO of DR, and in the presence of His Excellency Marwan bin Gulaita, the CEO of RERA. According to representatives, the new branch will allow potential and existing customers to see property transactions through with ease from start to finish, including sales and transfer requests. On the occasion, the CEO of DR stated that the opening is very timely, as the company is performing well in the Burj district with demand on the rise. He added that the Business Bay area is drawing high investor demand and that they are looking to launch a number of projects in the district. And continuing with the property market, the UAE was ranked as the #1 destination for GCC nationals to buy property in 2011, up by 67.5%. According to a report released by the General Secretary of the Gulf Cooperation Council of Arab States, 10,873 properties were bought by GCC nationals. Oman followed with 3,364 properties, while Kuwait, Qatar and Saudi Arabia followed in the 3rd, 4th and 5th ranks. The report revealed that Kuwaitis owned the most amount of UAE properties from the region, with 8,130. Saudis followed with 2,312. Emiratis came in 3rd with 2,267, followed by Qatar, Bahrain and then Oman. It was a mixed week for the US dollar in trading last week amidst several key economic releases, which included the European Central Bank and Bank of England rate decisions. With both banks keeping rates unchanged at 0.50%, investors instead chose to focus on ECB President Mario Draghi's press conference. Also on the calendar was the headline data release on the week, Friday's US non-farm payrolls report. The US dollar was able to make significant gains as a result of the news against commodities and the Indian rupee, which shed almost 1% in trading last week. Well, we earlier spoke to Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, to see what he was looking out for in the week ahead.
Well, Laura, by far the story of the week in the currency markets has been the Indian rupee and the fact that it's hit a record all-time low against the US dollar. At last glance, the Indian rupee was trading at just below 58 Indian rupees to 1 US dollar in the spot markets, with the June futures contract trading at about 58.2 against the US dollar. Now what we've seen is the rupee has been on a one-way slide downwards. It's lost about 6% in the past month, with about 1% losses coming in trading last week. And the weakness in the Indian rupee can be attributed to two main phenomena, the first of which being a stronger US dollar along with weakening Indian fundamentals. Now last week what we did see was on Friday, the US non-farm payroll report really boosted prospects in the markets that the Fed would look at tapering down their asset purchases, and this led to increases in the US dollar. Now the Friday US non-farm payroll report showed that 175,000 new jobs were added, well above the expectations of 163,000 new jobs. Now, although the unemployment rate did worsen to 7.6%, this was largely seen as offset as a result of an improving participation rate in the US economy. But overall, what we're seeing is that positive sentiment with the FOMC looking to unwind has led to the US dollar strengthening across the board, even more so against the Indian rupee. Now, if you move over to India, there's been a very, very large demand for US dollar purchases on behalf of oil importers who have to purchase oil from with their US dollars. And of course, we've seen a very, very large unwinding of domestic debt positions by foreign institutional investors. Somewhere around the lines of about 2.5 billion US dollars has been unwound in the past 2 weeks of trading. So these have all further amplified the move lower for the Indian rupee. Now, looking at the week ahead, we do have some industrial production figures coming from India on Wednesday. That's expected to come in at 2.4%. And of course, we have the inflation reading also coming on Wednesday, which is expected to come in at 9.09%. So that'll be stubbornly high. These two pieces of data will be very, very key in the lead up to the RBI's meeting on June 17th, where they're largely expected to hold their interest rates unchanged. What we will expect to see is the Indian rupee will continue to weaken in the week ahead, and we're probably looking at a target of between 59 and 59.5.